Okay, good morning everyone. Let's begin. Okay, let's start with our MTP discussion. Same examination pattern only it is. Okay, I feel that this MTP was a little easier than the examination standard. Okay, all the easy questions of the material they have picked and they have put over here. Okay, first one, insurance claim received on account of plant and machinery completely damaged by fire is a capital receipt. Is it true or is it false?
True.
It is true. Why? Insurance claim is received, okay, for plant and machinery. If at all this insurance claim was received for stock, then it would have been revenue expenditure. Clear? You have to see why the insurance claim was received. If insurance claim was received for loss of stock, then it would have been revenue expenditure. It is received for plant and machinery. Therefore, it is capital expenditure. It is true. You can see over here, true. Clear? Next, wages paid for erection of machinery was debited to P&L. Wages paid for erection of machinery is a capital expenditure. So, it cannot be debited to P&L. It is false. Clear? False. Next, the financial statements must disclose all the relevant and reliable information in accordance with full disclosure principle. Remember the concepts, chapter number 1. You have full disclosure concept. That means you should not hide anything when you are preparing financial statement. You should disclose everything. And here also they told that you should disclose everything. So obviously this is true. Clear? Next, the business of partnership must be carried on by all partners. Is it true? No, if this is true, then the concept of sleeping partner is not there only, no? Are you getting my point? So what is sleeping partner? Person will put money and he will sleep. Not literally. Okay, he will put money but he will not come to the partnership firm. So here, this is false. I think somewhere in partnership they have told that business must be carried on by all or any of them acting for all. Okay. False. Next, debit notes issued are used to prepare sales return book.
False. Purchase return.
It is purchase return book. Simple. If you get confused about debit note and credit note in the exam, no, just think of the entries. If I am doing purchase return, what will be my entry? Creditor account debited to purchase return. If I am doing sales return, my entry will be sales return debited to customer or debtor. Correct? So, in purchase return, creditor is debited. So, we will prepare debit note. In sales return, debtor is credited. So, we prepare credit note. So, obviously, this is false. Debit notes issued are used to prepare sales return book. Clear? False. Next, sixth one. When shares are forfeited, okay, share capital account is debited. Is it debited first of all? Yes, it is debited. Okay, with called up capital of shares. Is it called up capital or face value?
Called up capital.
Called up capital, not the full face value. Called up capital only. Okay, of shares forfeited and the share forfeiture account is credited. Is it credited? Yes. With calls in arrears. Is it calls in arrears? No. It is credited with the amount received. Whatever amount is received, we are not going to give back. That's why it is credited. So this is 99% of the sentence was true, but the last part made it false. You can see over here false. And you can also see share forfeited and the share forfeiture account is credited with the amount received on share forfeited. Is this clear?
It's look like we're crediting that calls in arrears also.
Yeah, we are not crediting calls in arrears. Okay, just to understand, if at all you want to know the entry, we always pass the entry equity share capital account debited. This is for the called up amount. This is for the called up amount. To share forfeiture account. This is the amount received. And to calls in arrears. This is the unpaid amount. Amount not received. Clear? This is the entry. Everything they told correctly, but they said that share forfeiture account will be credited for the calls in arrears. It is not calls in arrears. It is for the amount received. That's why it became false. Clear? Next. What services can a chartered accountant provide to the society? Okay. When we are doing this course, we should know, no. Okay, at foundation level only, what and all we can provide to the society. I feel this sentence only is wrong, no. What are we providing to society? We are doing for ourselves. Correct? Okay. Now, see. In brief, we will see maintenance of books of accounts. Somebody comes and asks you to maintain books of accounts. Maintain books of accounts. Statutory audit. What is statutory audit? Which is required by statute or which is required by law. Companies Act is telling that audit should be done. So they'll come to you for that. Internal audit. Owner has put money, sleeping partner. He has put money and gone and slept somewhere. He wants to see whether his workers are doing work properly or not. Internal audit. Check what is happening. Taxation. Obviously complicated. Okay, if it was simple, then we would not have work only. Then management accounting and consultancy service. Somebody just wants to start one startup. Okay, startup they want to start. They'll come and ask you whether we can start this in Kormangla. Is it possible? Will it be profitable? Okay, so you're just giving consultancy service over there. Obviously, you'll charge money for that also. Okay, financial advice and financial investigations. Financial advice. Somebody wants to have 10 lakh rupees with them after 5 years. So they'll come and ask you, how can I save in such a way that it will become 10 lakhs in 5 years? You're giving advice to them. Financial investigation. Somebody feels that their balance sheet which the management has given, shareholder feels that management has given one balance sheet, it is not proper. I feel it is something has happened over here, Golmal. Okay, so they will ask you to do the investigation. Other services like secretarial work. What is secretarial work? What is secretarial work here? Any idea? In Companies Act, lot of times you have to go to ROC and do some filing and all. Correct? Some forms are there you have to file. Usually they go to company secretaries for that. But even chartered accountant can do it. Clear? Share registration work. Share is being issued. That time you have to register the shares with again all the government authorities. That also can be done. Company formation receiverships. You are going to form the company, you know, right? Company setup, memorandum, articles, all those things from everything. All the forms which are there, spice form and all that we have to file. Everything. Arbitrations. Arbitrations means what? Disputes. All this can be done. Etc. is also there. Okay. So they have asked this question. If it comes, imagine we are clearing CA Foundation exam without knowing this answer. It is like, we don't know why you are doing CA, but we'll clear the exams. Okay. Now, the following are the details of spare parts of a paper factory. Inventory question they have asked, and we have to always go to the end of the inventory question before we start, because we have to know whether it is FIFO or weighted average. Find out the value of inventory on 31st of March 2025 if the company follows weighted average method. 4 marks. Okay, very common question in the study material also, but it's easy. You know, right? Inventory has other side also. Inventory has two faces. One face is this, showing nice side. Inventory has other side also, showing the side which we don't understand anything. Okay, that side also you should be very thorough, because usually in exams they copy paste the questions from study material inventory, because already complicated questions are there in the material. They just take it, change names, numbers, that's it. Okay, what questions I'm talking about? You have done the stock taking later, you are going to do reverse calculation. You have done the stock taking before, you are doing forward calculations. Okay, there sale of goods on approval becomes a major player. Okay, rectifications become a major player. And also that Hanuman question, one Hanuman question is there, that also it's unique. Okay, following are the details of spare parts. Opening inventory is 0. You know, you have to prepare a table here. This table which we prepare is called as what? Periodic inventory or perpetual inventory? It is perpetual inventory. Periodic inventory is we are not doing anything. Whenever we want, we'll pull the shutter down and start counting. Are you getting my point? Perpetual inventories will prepare a table, maintain records. Okay, opening inventory is nil. Okay, you can see over here, starting balance is 0. Okay, then what happens? Purchase 10 units at 300. Now no problem, it's the first purchase. So directly we'll write 10 units, 300, that makes it 3000, and that will result in the balance. Clear? Then issued for consumption. We have only one purchase, whether it is FIFO, LIFO, average price, weighted average price, does it matter? No, we don't have to calculate anything. Directly 5 units will be taken at that price only, 300. Is this clear? Issued also at 300. Out of 10 units, if 5 units are gone, then you will have only 5 units left. Is it clear? Next, here you have to be careful. Purchases, freight incurred. How much is the purchases? 20 units at 400. So 20 into 400 makes it 8,000. And 500 rupees for freight also. Plus 500. So total amount that we have spent is 8,500. So 20 units. Okay. 8,500. How did they get this 425? 8,500 divided by 20. 8,500 divided by 20, you get 425. Okay, now here you have 1,500. Here you have 8,500. Clear? 1,500 plus 8,500, that makes it 10,000. Divided by, here you have 5 units. Here you have 20 units. So divide by 25 units. That makes it 400. So your weighted average price is 400. Anymore after this, if you have any issues after this, okay, you are going to issue it at 400 only. Can you see after that you have two issues, 10 units on 2 different dates. So can you see both those issues, 10 at 400, 10 at 400. Finally, you will be left with 5 units. 5 units will also be at 400. Even the structure of the question, they are not changing. I feel even in study material, the questions are like this only. You will have back-to-back issues of same quantity. Okay, that also they are not changing. That is not necessary that they'll give the same thing in the exam also. Okay, don't buy out and go. Next, we'll go into question number 2. 2A, 10 mark question. Show the machinery account for the year 2024-25. Depreciation. Clear? On 1st April 2024, anywhere in the question, first you have to analyze. Anywhere in the question, can I find the word provision for depreciation? No. And end of the question, they also told that machinery account. That means we are following method 1. Method 1 where we reduce the depreciation from the asset itself. Clear? So on 1st April 2024, Supervisor and Co. which depreciates its machinery at 10% per annum on diminishing balance method. Which method they were following? WDV method. They already had 29,16,000 to the debit of the machinery account. Let's stop there itself. 2 balance brought down. Okay, so what we will do? Can you see over here 1st April? 2 balance brought down 29,16,000. Then after that, what's going to happen on 1st October 2024? Part of the machinery purchased on 1st April 2022. Once upon a time, 2 years back, they had purchased this for 2,40,000, was sold for 1,35,000. Usually what we do? We start doing the calculation from starting. Why we do the calculation? Because we want to know the depreciation till the date of sale. Okay, but wait. Okay, here company changed the method of depreciation from diminishing balance method to straight line method with effect from 1st April 2024. Rate of depreciation remains same, they are telling. Rate of depreciation remains same. Now we have to do the calculation. What was the cost on 1/4/2022? 2,40,000. What method they were using that time? WDV method. Take 10%, that is 24,000. So you will arrive at 2,16,000. This is only on 31st of March 2023. Where are we? We are on 1st April 2024 and the sale is on 1st October 2024. So what we are going to do? Again remove 10% depreciation, 21,600. That time you will get 1,94,400. You will get 1,94,400. Is this clear? Then less depreciation. We sold on what date? 1st October. So 1,94,400 into 10% into 6 divided by 12. Are you getting 9,720? Yes, sir. Here method changed. No, sir. Here method changed. Huh? Percentage remains the same. Method changed on 1/4/2024. Okay, method changed on 1/4/2024. That means anymore, if at all this asset was there, 1,94,400 was the WDV. No, when we changed the method. Anymore, if the asset was there, asset is not there now, asset is sold. If it was there, every year it would have been 19,440 depreciation. If the asset was there, every year the depreciation would be 19,440. But now asset is sold and it is sold in the middle of the year. So half the depreciation we are going to take. After removing that, you get the WDV on the date of sale. This is the WDV on the date of sale. We sold it for what value? 1,35,000. So 1,35,000 if you remove, you will get 49,680 as loss. Clear? Now, when
Money for 2024 they are changing. No, so in SLM, we want to take that, if the asset is there, we want to take the 19,440 every year.
every year. If asset is there, 19,440 every year. Whenever they change the method of depreciation, on the date of change, we have to see what is the value. That is WDV. From there, if it is whichever method we are changing to, using that value, we are going to apply the new method. Imagine they could also have told in this question, okay, they are going to change to straight line method with useful life of 5 years. Okay, that time what will happen? You would have taken 1,94,400 divided by 5 years. They could also have told it will be with useful life of 5 years and scrap value of 10,000, then you would have subtracted. So they have not given the useful life. They told take the same rate of depreciation. If you take the same rate of depreciation, you know it will be the same depreciation every year. Same depreciation every year. But now this we are not worried because asset is gone. But for the assets which are not gone, for that we will have to calculate depreciation. Clear? So when asset is sold, three things always. What is the first thing? Depreciation till the date of sale, you have to pass the entry. Amount received, you have to pass the entry. Profit or loss, you have to pass the entry. Okay. Now, can you see? Depreciation till the date of sale 9720. Amount received, bank account debited to asset account. Loss, P&L should be debited. So P&L account debited to asset account. Sale is completed. Clear? Now, after that, also a new machinery at a cost of 4,50,000 was purchased on 1st October 2024. Same day, when you sold, you purchased one new machinery. Entry for this will be machinery account debited to bank account. 4,74,000. Oh, sorry, this 24,000 is also there. So 450 plus 24. What is this? Installation charges. Okay. Now 474. After that, they have not told anything. Now what we have to calculate? Simple. On this one, we have to calculate depreciation for 6 months. And for the remaining assets, okay, remove the WDV of the assets sold, then calculate depreciation for full year. Okay, now tell me one thing. From the WDV, total WDV, which amount are we going to take? Remove.
1,95,000.
Not 1,84,680. No. WDV at the beginning of the year. From that, remove the WDV at the beginning of the year itself. 1,94,400. Okay, you can see over here 29,16,000 is the total WDV. Remove 1,94,400. You will get the WDV of the remaining assets. On this, what you are going to calculate? 10% depreciation. So that makes it 272,160. 272,160. And the new asset is 474,000. On that also 10% depreciation, but only for 6 months. That makes it 23,700. Okay, 23,700. So 272,160 plus 23,700 will be your total depreciation. How much is it? 295,860 by depreciation. Is this clear? After that, here they have calculated the balance of the balance value of the assets. You don't even have to do that. Why? Straight away you'll get balance carried down over here, balancing figure 28,99,740. 10 mark question. Similar 10 mark questions have been asked in the exam before also. Okay, one sale, one purchase. Usually one sale, one purchase, and change in the method of depreciation can also be there. What else can we expect here? One sale, one scrapped. One sale, one is scrapped. Scrapped means what? Sold for zero value. Sold for zero value. So calculate the WDV on the date of scrapping. Whatever is the WDV, entire amount is loss. Clear? Yes. Let's go further. Oh, another 10 marks. Easy. BRS, huh? Yes, you are required to prepare BRS. BRS also, you have to go to the end of the question first. Why? To see whether there is adjusted cash book or not. Directly they have told BRS. Okay. So, on 30th September 2024, bank account of Samir, according to the bank column of the cash book, was overdrawn to the extent of 32,496 OD balance as per what? Cash book. On the same day, the bank statement showed a credit balance of 539,024. Good. Good, they have given both. Why we should? If at all you miss, you will know that you missed. Otherwise, if they don't, if they give one and don't give the other, what happens? And whatever result you get, you will stop there and go to the next question. Clear? Now verification point is also there. 539024. Observe this. This is showing credit balance. That means in bank there is normal balance. In cash book there is OD balance. So when you calculate OD balance you are starting, when you do plus and minus, you should get a negative figure. That means it is the opposite. Okay. Starting point is 32,496. Can I take bank and start? Doesn't matter. You are both right. You can start with anything, but usually what number is given first, we start with that. Okay, you can start with anything, no issues. Let's start. OD 32,496. 32,496. In OD, very important thing you have to understand. If money comes in, balance goes down. If money goes out, balance increases further. Okay. On examination of the cash book and bank statement reveals the following. A check of 105120 deposited on 29th September 2024 was credited by the bank only on 3rd October 2024. This is what check deposited, not credited. Who passed the entry? Cash book. Cash book, if you deposit the check, what will happen? OD balance will decrease. So you will add it back. 105120. Clear? Add it. Okay. Next. A payment by check of 1280 has been entered twice in the cash book. Payment, first of all, you tell me what will happen to the balance. OD balance will increase. Once it increased, passbook also increased. Then, once more you have increased. So, what happens now? You have to reduce it. So, 1280 minus 1280. Next, on 29 September 2024, the bank credited an amount of 93,920 received from a customer of Samir, but the advice was not received by Samir until 1st October. Bank has received the money. That means what did bank do? What happens to bank balance? Bank balance decreased. So your left hand has moved. So what will you do? You will also decrease 93,920. Okay. Next, bank charges amounting to 4640 has been not been entered in the cash book. Bank has added. You also will add 4640. Next, on 6th September, bank credited 1,60,000 to Samir in error. By mistake, bank has given you money. So what happens to the bank balance? Minus. So you will also minus 1 lakh. Sorry, not 1 lakh, 16 lakhs. There is some, here they have given, here they have given in millions actually. But 10 is also missing, I think, no? Comma, they have made an error in the comma. They have given in million system over here, and here they have given properly in lakhs. Okay, no problem. A bill of exchange for 11,20,000 was discounted by Samir with his bank. This bill was discounted on 28th September, but no entry had been made in the books of Samir. Okay, bill is discounted, but then it is dishonored. That means bank took the money. That means bank added. You also should add 11,20,000 plus minus. You will be able to do. Okay, that time automatically you are getting. Do we have one more thing? Oh yeah, one more thing is there in the next page. Check issued but not presented for payment. Check issued, cash book balance will increase, so you will decrease it. 106,080. When you do all this, you are getting 539,024, and that was already given in the question. What is the advantage over here? If at all any number, instead of add you did subtract, then you will not get 539,024, so you can recheck your answer. Okay, that is the advantage. Let's go further. Which one? Check was, bill was discounted. Bill was discounted means I gave the bill to the bank and took money. Now the bill was dishonored. Dishonored means whenever bill discounted, dishonored. What will bank do? They'll just take the money from you. So passbook the increased because they have taken money. So cash book you have not passed the entry, so you will also add it. Okay, third question, 3A. This is also one 10 mark question. What have they asked? Prepare manufacturing account, trading account and P&L.
So
One.
what is your opinion with solving problems before we solve working note before and after problem?
No. There is no opinion only on this. Solution only first. What you can do is, you will do the working note first. Do one thing, keep 1 page, 2 page blank. Go to the third page, do the working note over there. Then come back and fill the solution. Don't put the working note on at the starting, because if your solution is fine, the person might not even look at your working note. But first only you put the working note. Then if they don't like how you have presented, then when they're going to the solution, they might cut marks for small errors also. Working note should form part of your answer. That means answer should be first, no? Okay, don't do that. You will know roughly for every question how much marks are, how much pages are required. Keep that and then you do the working note. But obviously, some questions you can't start without working note. Like, for example, incomplete records. Can you start? No, you need debtors account, creditors account, and all those ledgers you need. So, trading P&L balance sheet, you know, some roughly 1.5 2 pages is required. Keep that blank and then start with the debtors account. But you know how we have done in marathons, regular class, everything. Everything will be open. Trading account, P&L account, balance sheet, opening balance sheet, and debtors, creditors, bills receivable, bills payable, everything will be open. At the same time, we have to solve everything. So that one thing is time is also saved. Another thing is you don't miss anything. Understood? Why did you get that doubt, bud?
Sir suggested the same, like, do working out and get this.
Yeah, but not first. Do working note is what it
Do personally.
is. It. Prepare manufacturing account. See, you should just go to the suggested answers. What are they doing? Simple. Okay, prepare manufacturing account, trading account, and P&L account for the year ended 31st March 2025. One thing you have to understand, if manufacturing account comes, trading account comes, and P&L account comes, then the adjustments will not be that tricky. When trading and P&L only are there, then they can stress on more tricky adjustments. To this, even balance sheet could have been added, but because it is only 10 marks, they did not give balance sheet here. Okay, now, always we have to look at what? The adjustments first. The following additional information is available. Raw material, closing stock. Raw material, closing stock. Where will it go? It will go to manufacturing account, not on the credit side. It will be subtracted when we are calculating cost of material consumed. 1,62,000 should be subtracted. Can you see 1,62,000 minus in manufacturing account? And this 1,62,000 should go to balance sheet, but we are not preparing it. Have they prepared for fun? No. Next, finished goods closing stock. This will go to trading account credit side. Trading account credit side. Can you see by closing stock over here? This also would have gone to balance sheet. Then work in progress closing stock. Where will it go? It will go to manufacturing account, but not debit side this time. It will be on the credit side, 78,000. Yes, 78,000. Is this clear? Now, next, salaries and wages unpaid for the year ended 31st March 2025 were 9,000 and 20,000 respectively. Salary unpaid, you will add it to P&L. Wages unpaid, you will add it to manufacturing account. Okay, let's check. Salary, can you see outstanding is added over here? It would also go to balance sheet. Where? Liability side of the balance sheet, outstanding expense. And then in the manufacturing account, can you see wages? This also will go to balance sheet as liability, outstanding expense. That's it. Oh, done. No? Oh, okay. Rent is to be charged 3/4 to factory and 1/4 to office. Okay. Lighting will be charged 2/3 and 1/3. So 2/3 will go to manufacturing, 1/3 will go to P&L. Rent will go 3/4 to manufacturing and 1/4 to P&L. Okay. First, opening stock, we have raw material. Where should I put opening stock of raw material? Manufacturing account, debit side, the calculation. Okay. Can you see the calculation? 2,10,000. Clear? Then work in progress opening stock on debit side only, but as a separate item. Okay, separate, you can see two opening stock of WIP, 95,000. Yes. Then opening stock of finished goods. Trading account opening stock, 1,55,000. Okay. Now I want to ask a curious question. Raw material, work in progress, finished goods, all three are given in the question. But in the exam, they ask you prepare trading account and P&L account. They have not done till now. If they do it, what will you do that time? As a working note, you will do manufacturing account so that you can get the cost of material manufactured. Okay, next. They have not, but you never know with ICA, right? Sundry debtors. Where will this go? 2,40,000. Nowhere. Because we are preparing manufacturing account, trading account and P&L. So it will not affect us in this solution. It will go to balance sheet. Carriage on purchases. It will go to manufacturing account. Okay, where is it? Yes, here, 15,000. If at all manufacturing was not there, this would have gone to trading account. Then bills receivable, balance sheet item, wages, It will go to manufacturing, 1,30,000. Can you see this? Yes. After that, salary. Salary will go to P and L. Can you see it over here, 1 lakh? Yes. Then telephone charges, telephone and postage will go to P and L, 10,000 over here. Then repairs to office furniture, it will go to P and L, 3,500. If it was repairs to something related to factory, it would have gone to manufacturing. Then cash at bank, balance sheet item, office furniture, balance sheet item, repairs to plant, manufacturing, 11,000. Then purchases, no, manufacturing, opening stock of raw material plus purchases minus closing stock of raw material, cost of material consumed, 8,50,000. Can you see 8,50,000 added here in the manufacturing account, and then that will give you the cost of material consumed. Clear? Then plant and machinery, balance sheet item, rent. Remember 3/4, 1/4. Okay, we have to divide that rent. Rent 3/4 is over here, and 1/4 of the rent is there in the P and L. Clear? Then lighting. Lighting also, did they tell something? 2/3, 1/3. Yes, 2/3 is over here and 1/3 is over here in the P and L. Clear? Yes. After that, general expenses. Directly you will put into P and L. Then on the other side you have sundry, creditor. Don't bother. It will go to balance sheet. Bills payable. Don't bother. It will go to balance sheet. Sale of scrap. Byproduct sale. It will go to manufacturing account. In manufacturing account, you'll put it as a income credit side. Clear? Basically, it's not really an income. It's income only, but it is going to reduce your cost of manufacture. Next, commission received. Manufacturing, no, P and L, 4,500 straight to P and L. Then provision for doubtful debts. Everything went smooth. It will go straight to balance sheet. Yes, liability, it will be subtracted from debtors. Because provision is there in the trial balance. If provision was given outside the trial balance, that time double effect. That time P and L would be debited and also balance sheet would be impacted. Clear? Capital account will go to balance sheet. Don't bother. Sales, 16,72,000. Trading account, 16,72,000. Then bank code also will go to balance sheet. And out of the adjustments, we have seen all the adjustments. Okay, after that, it's just your calculator work. What you're going to do? Here you'll get the cost of, here the balancing figure is cost of manufacture. This cost of manufacture will come to trading account. It will come to trading account. Then here the balancing figure is gross profit, and gross profit will go to P and L. And here the balancing figure is, oh, see, provision for doubtful debts, they put in P and L. This is wrong, guys. How can it be in the trial balance and come to P and L over here? Are you getting my point? If it is there in the trial balance, that means they have passed the entry. That means they have passed the entry P and L account debited to provision for doubtful debts. It's already there in the trial balance. Are you getting my point? That means it was already debited. Somewhere in the past, it is there in this trial balance. So actually this should not be over here. Net profit will be there. Now, why they didn't give balance sheet here? If they would give balance sheet, no, it would not tally. Or if it would tally also, they will take debtor directly. Because they already put it over here. But you know, I see they have done correctly in other places. If it is given in trial balance, don't take it in P and L. Is it clear? Simple. Because if it has come to trial balance, that means entry is passed. And entry is this. Is this clear? Yes. If bad debt is there in trial balance, straight to P and L. Okay. But if it is there in trial balance and we have provision for bad debts, then you will not take it to P and L. You will subtract it from the provision. If bad debt is there in adjustments, then you will minus from debtors, and you will also see whether there is PBD. If there is PBD, then same thing. Either PBD or you will take it to P and L as expense. Clear? Yes. Even one mock test also they couldn't spare without mistake. Yes. Let's go. Actually, all the old mock tests, if you take also in mock tests, they make lot of errors. In RTPs, usually they don't make many mistakes, but in mock tests, there are errors. Okay. B. X, your favorite part is finally here. You are waiting for it. Yes, partnership. X, Y, and Z were partners. V partners. Sharing profits and losses in the ratio of 3:2:1. They decided to dissolve the partnership when their balance sheet was as follows. In dissolution, there are two parts. One is just preparing ledgers. Other one is the piecemeal distribution. Here, what have they asked? They have asked you the ledgers, realization account, cash and bank account, partners capital account in the books of the firm. Okay, so what we do usually when there is ledgers also, again here there are two parts. One normal, other one is Garner versus Murray. Okay. Now, as we always discuss when we have realization, what we do first? Empty the balance sheet. First, what we will do? Empty the balance sheet. Transfer everything to realization account. Transfer partners capital and all to partners capital account. Bank account you keep separate because later you will have some bank transactions. Now, first you can see here all these three balances. Where will it go? Partners capital account. See the partners capital account. You are writing by balance brought down. Clear? Next, after that, general reserve. What will you do with general reserve? Distribute to partners in what ratio? 3:2:1. 3:2:1. So 3 lakh, 2 lakh, 1 lakh. Can you see this? Yes. After that, employees provident fund. You can just put it to realization account. From there also it will come to partners only. There are areas where in ICA sometimes they have put directly to partners, like reserve only they have distributed that. That is also not wrong because ultimately it should go to partners. Okay, employees provident fund 2,40,000. Is it clear? But better to put to realization account. I mean, effect is same if you put to capital account also. But I say, you know, right? Some places they do one thing, another place they want to show all the alternatives. It's not wrong, but you follow this because usually what we do, emptying the balance sheet. Okay, put everything to realization. Later see what happens. Okay, next, trade creditors. This also will be transferred to realization account. Okay, entry, if they ask what is the entry? Creditor account debited to realization. Liability to remove. Liability should be debited. Now, assets. Land and building. Okay, land and building over here. Machinery, furniture, stock, debtors, everything is transferred. Can you see debtors, stock, furniture, machinery? Only thing that is not transferred over here is cash and bank, because cash and bank we have to keep it separate. You will have a ledger over here. Oh, they didn't ask. Oh, it's here. 176,800. Is this clear? Opening balance. From here, you don't have to worry about anything which is there in the balance sheet. What will be the situation now? Whatever happens, your entry will be between realization account, partners capital account, and the cash and bank, cash at bank account. So anything happens, it should impact any two of these. Clear? Now, the following information is given to you. There was an unrecorded investment which was sold for 1,20,000. Sold for 1,20,000 means we are getting 1,20,000 rupees. Bank account debited to what? Realization account. Okay, realization of assets. They have given the total. Have they shown a working note for it? Okay, here they have shown it, no problem. Okay, can you see over here by bank? Here they have given the bifurcation. There they have given the total. Unrecorded investment 1,20,000. Is this clear? Okay, even if it was recorded investment also, entry was same. Even if it was recorded investment also, already investment you have transferred to realization account, then the entry will be bank account debited to realization account. Clear? One of the creditor agreed to take over some items of furniture of book value 1 lakh at 96,000. Creditor took the furniture. What should be the entry for this? Creditor to furniture. We don't have creditor also, we don't have furniture also. Both are sitting in realization account. Realization account debited to realization account actually. No entry. We don't have to actually pass entry. Some areas ICI actually shows the contra effect also, but it's not wrong. Are you getting my point? Here have they done it? No. Here they have not shown the contra effect. Are you getting my point? If normally, when business is going normally, creditor takes the furniture. What is entry? Creditor account debited to furniture account. Profit or loss will go to P&L. Here, creditor is taking the furniture, yes, but already creditor we have transferred to realization account and furniture also we have transferred to realization account. So now what happens? Creditor and furniture both are sitting in realization account. Both of them we have to remove. Realization account debited to realization account. That is the impact. Okay, so you can just ignore that impact. But Rest of the creditors were paid at a discount. Now, what is the creditor balance over here? 4,96,000. Creditor balance is 4,96,000. Okay. Creditors agreed to take over furniture at book value. Book value was 1 lakh, but they took it at what value? 96,000. So remove 96,000. So only 96,000 got adjusted. So you have 4 lakh of creditors still remaining. Okay. The rest of the creditors are paid off at a discount. Remove 5%.
3 lakh 80.
3 lakh.
80,000.
3,80,000 you are going to pay. Entry. Realization account debited to bank account. Realization account debited to bank account 380. Is this clear? And in bank account also you should have this number ticked. 380. Okay, here also they are putting the total. I think bank account everything together they are going to put. So 380 is there. There the total will be there in the bank account. Clear? Next, after that, one of the trade debtors of 36,000 proved bad. That means he's not going to give you money. In dissolution, we don't bother. If they are not going to give money, no entry. If they give money, we will record now. Okay, remaining were fully realized. How much was the trade debtor? 6,24,000. Out of that, 36,000 is bad. So 5,88,000. Are they going to give money? Yes, entry. Bank account debited to realization account 5,88,000. There you will have the total. Okay. Next, other assets were realized as under. Land and building 21 lakhs. Bank account debited to realization account 21 lakhs. Next, machinery 6,80,000. Bank account debited to realization account 6,80,000 over here. Then remaining taken over by X at 3 lakhs.
Capital.
Should we do calculation? How much went, how much remaining and all? No, because they already told us. If they would frame the sentence over here, remaining taken over at 90%. If they would tell remaining taken over at 90%, then what we have to do? Go and check what was the furniture. Furniture was 4,20,000. Out of that, how much is taken? 1 lakh, not 96, 1 lakh, 3,20,000. They took it at 96. But furniture book value, how much went? 1 lakh. So for furniture, you are supposed to remove 1 lakh, but they took at 96. So from the loan or whatever, the liability, we are supposed to subtract 96. Clear? This is the value which is remaining. But we don't need to worry about that. If they tell it is taken at 90%, then we'd have calculated 90% of this. But they already told us that it is taken at 3 lakhs. Who took it? Taken over by X. What should be the entry? Capital to realization. X capital account debited to realization. Go and check in X capital. Can you see 3 lakhs over here? And in realization account, can you see 3 lakhs over here? By X capital account? Yes. Next, after that, they said stock is taken at 2,40,000. Bank account debited to realization 2,40,000. Now, whatever all these bank transactions, total is taken in the bank account. Clear? 37,28,000 is there. 37,28,000. Clear? Next, expenses of dissolution amounted to 74,800. Realization account debited to bank account. Expenses. Whenever we are not able to grasp the entry, bank is not the first thing that should come in our mouth. Think should be the first thing that should come in our mouth. Are you getting my point? I know you make these mistakes. When you are not able to get the entry, immediately you will tell bank account in the mouth. Correct? No. First you should think. Bank should come later. Is this clear? Okay. Now, 74,800 realization expense is over here. Next, there was an outstanding bill for repairs which had to be paid for 14,000. Realization account debited to bank account. 14,000. Yes. So here, whatever these bank transactions are there, one more will be there. Okay. After that, actually, they have not told anything. But whenever dissolution, these kind of questions are there, you have one checkpoint. What is that checkpoint? After everything, go back to the balance sheet and see if all the liabilities are paid. Did you pay the creditor? Yes. Other than that, you have only one liability, employees provident fund. You should pay that also. It is kept for employees. No. You should pay that also. Why we have to do this checkpoint is if you don't do this checkpoint, imagine over here they have written outstanding salary. Okay. And they have not spoken anything about it. if you don't pay this and go ahead and distribute the money, it is like without paying the outsider, you're distributing money to the partners. So always you have to check if all the liabilities are settled. Clear? Employees provident fund has to be paid. What should be the entry? Realization account debited to bank account. Realization account debited to bank account. And this total, whatever is there, no bank transactions, 380, 14, 74,800 and 240. How much is that? 380, 14,000, 74,800 and 240. 7,08,800. Can you see they have taken the total only here directly? Okay. Done with the question. Now what is our steps we are going to follow? First we are going to close the realization account. First we are going to close the realization account. Balancing figure you should see. If it is credit side more, that means it is profit. Debit side more, that means it is loss. This profit is transferred to partners capital in their profit sharing ratio. Okay, directly can you see 48, 32 and 16. Done. After that, what is our job? To distribute the money. But the money that is there in the bank account is not distributed in any profit sharing ratio or anything like that. Money that is there in the bank account, how it is distributed? See each partner's capital account. What balance is there? If it is credit balance, pay. If it is debit balance, take from the partner. If you notice over here, all the partners are having credit balance only. That means credit side is more. Debit side only one transaction for one partner. So whatever this is the balancing figure you're going to write to bank. That means partners capital account debited to bank account. That means amount is paid. Can you see those amounts here also? That is end of the story. Dissolution. Okay. There could have been trickier questions also asked in the exam. What can they add? Ghana versus Murray. When Ghana versus Murray comes, what is one thing we have to keep in mind? If there is, if there is realization loss, okay, that time immediately solvent partners will bring money. Remember all those questions. When there is realization loss, you will pass the entry partners capital account debited to realization. Then solvent partners, immediately on the other side you will find by bank. That means bank account debited to partners capital account. No. They will bring only their share of loss. Their share of, okay, for example, if at all there was realization loss, X, Y, Z. Okay, here I am having 100, 20 and 10. They realize share of realization loss. Imagine this Z partner is insolvent. Then here we will write by bank 100 and 20, 0. Because that fellow is already insolvent. He is not able to bring money. Huh? His share of loss, last it will be borne by other partners in capital ratio. That is Ghana versus Murray. His share of loss right now is not bringing money. So first you have to remember that this is one extra point if Ghana versus Murray is there. And another thing is other solvent partners will bear the loss of whom insolvent partner in capital ratio. Okay, sir. So whoever has debit balance, that means they're all insolvent. Is it true? No. Whoever has debit balance does not mean that everyone is insolvent. And one more thing is, if a partner is solvent and he has debit balance, then he is not part of this Ghana versus Murray. Because they said it is in capital ratio. If he has negative capital, how to take the ratio? Are you getting this? Okay, this also can be an extra thing that can be asked. We have already discussed it. Let's go to the next one. 4A. Okay, 4A. Alpha and beta are partners sharing profits and losses in the proportion of 3/4 and 1/4. That means their profit sharing ratio is 3:1. As at 31st March 2025, following is the balance sheet of Alpha and Beta. Alpha and Beta are the regular items only in the balance sheet, no surprises. They agreed to take Gamma into the partnership on 1st April 2025 on the following terms. This is your admission. No retirement in this question. Admission and retirement can be merged, but only admission is there. Goodwill is to be valued at 6 lakhs. Okay, your big one headache is gone. Goodwill already, the value only they gave directly. Okay. Gamma is unable to bring cash for his share of goodwill. Doesn't matter. If they don't bring also, we will take it from their capital. Clear? So it was decided that due credit for goodwill will be given to Alpha and Beta for their sacrifice in favor of Gamma through Gamma's current account. We have this question in study material. Given through current account. given through current account, not given to current account. The person giving is giving through the current account, but the person getting will take it into the capital account. Are you getting this? Given through, okay, current account. Can you see? Given through Gamma's current account. Now, Gamma pays 4,20,000 as his capital for 1/5 share in the future profits. Whenever we have this kind of a situation, no 1/5 share in future profits and all, we have to find the new profit sharing ratio, yes. But whenever we have this situation like this, sacrificing ratio will be 3:1 only. Sacrificing ratio will be 3:1. Because if 1/5 you are giving to this partner, 4/5 is distributed to the old partners in profit sharing ratio only, old profit sharing ratio. So automatically by default, sacrificing ratio will be as equal to the old profit sharing ratio in this kind of situation, not everywhere. If they give that new profit sharing ratio is 1:2:1, then we have to calculate the sacrificing ratio. Clear? Okay. Now, stock and furniture to be reduced by 10%. What is the entry? Calculation, you know how to do it. What is the entry? Revaluation account debited to stock, revaluation account debited to furniture. Can you see a revaluation to furniture, revaluation to stock? Take your calculator and find the 10%. That we know how to do it. Okay. Provision of 5% for doubtful debts is to be created on debtors. Now you have to go to the debtors, 4,80,000. So realization account debited to revaluation account debited to provision for doubtful debts. Clear? Now here again you have to be careful. If already one provision was there, then only the difference you have to create. Or if there is excess provision, then you have to reverse it. Okay, next. After that, we have land and building to be appreciated by 20%. Land and building account debited to revaluation account 1,50,000. Then after that, they said capital account of partners to be readjusted on the basis of their profit sharing arrangement, making capital proportionate, and any excess or deficiency to be transferred to their current account. Usually the excess or deficiency will be routed through the bank account. That means excess will be given back, deficiency they will take the money. Clear? Revaluation account and partners capital account they have asked. Now first thing we will focus on this 4,20,000. Okay, this fellow brings 4,20,000. Now tell me one thing, goodwill. How much is the goodwill? 6 lakhs is the goodwill. Correct? 6 lakhs is the goodwill of the firm. Goodwill of the firm. What is this fellow's share in that? 1/5. 1,20,000 is whose share? Gamma's share. 1,20,000 which is there, no Gamma's share. It will be distributed to the others in what ratio? In their profit sharing ratio or sacrificing ratio 3:1. Value. Divide. 90,000 and 30,000. This will be put into partner's capital account, but it will be taken from partner's current account. Let's see that impact. Okay, opening balance and all, you know. General reserve also has to be distributed between old partners in their old profit sharing ratio. Revaluation profit also we have to put into partner's capital account. Then the partner brings money by bank. Can you see 4,20,000? Then we have to give. The partner getting has to be credited. Can you see by Gamma's current account 90,000 and 30,000. Gamma's current account. Otherwise, usually here it would be debited and there it would be credited. But Gamma's current account is debited. We are not preparing current account. So current account, if it is prepared, there the debit will be there. Is this clear? Then after that, you have to done. No, everything is done. You have to make the capital proportionate. Okay, whose capital you will keep as base now? Gamma. Gamma's capital is how much? 4,20,000 or 4,20,000 minus the goodwill share. 4,20,000 because goodwill share didn't go from capital. Goodwill share went from current account. So 4,20,000 is this fellow's share. For 1/5 share, how much is 1? 4,20,000 into 5. 21 lakhs. 21 lakhs is the capital. Yeah. If goodwill goes from capital account, then you will minus because what capital is there, that will be kept as base. Okay, now 21 lakhs, it will be in what ratio? 3:1:1 because that fellow is getting 1/5. 3:1:1. 21 lakhs in the ratio of 3:1:1. 12,60,000, 4,20,000 and the last person is also 4,20,000. So this should be the capital that we want. So this should be the balance carried down. This should be the balance carried down. Go to the partner's capital account. Can you see balance carried down 12 lakh 60, 4 lakh 20, 4 lakh 20. Done. Now what happens? Gamma it will match. Excess or deficit will not be there for gamma because we kept gamma's capital only as the base. Now check for alpha and beta. What we are going to do? Just check if we have excess or shortage. Okay. Here what happens? This person has shortage. So here we have written by alpha's current account. If that sentence was not there in the question, then it would have been by bank account because this person will bring money. So shortage was there, they'll bring money. Now shortage is there, we are taking from the current account and we are putting it to the capital account. Here, this fellow has deficit. Sorry, this fellow has excess, not deficit, excess. So we are supposed to give money. Usually we write to bank account, we pay it. But here we have transferred it to beta's current account. Gamma cannot have a difference because we kept gamma only as the base. Is this clear? Okay, simple admission question. These kind of questions are asked in the exam for 10 marks. When does this question become little lengthy? They add even balance sheet. That's it. They make this same question, they can make it lengthy by adding balance sheet. Balance sheet, we already know that we have revalued some things. Take the revalued figures. In revaluation, one more point is there, which we are not seeing in this MTP, but it can be asked. They will tell everything about revaluation and they'll tell partners decided to take the assets at their book value. That means we have to prepare memorandum revaluation account. First do the revaluation, distribute the profit or loss to old partners, then reverse the revaluation, then distribute the profit or loss to all the partners in new profit sharing ratio. Clear? Yes. That is not there, but still we just have to talk about it. B. Chetan carried on. Oh ho ho ho. Every marathon. Every MTP discussion. Somehow Chetan will come into that video. Yes, Chetan carried on business as retail merchant. He has not maintained. Oh, now we know when we start the sentence only. Not maintained means we have to do it now. Okay, regular books of accounts. That means it is incomplete records. Okay, again, this one also is asked for 10 marks. Trading and P&L account for the year ended and also the balance sheet. Okay, here. However, he always maintained 40,000 in cash. Always 40,000 cash he is keeping. That means we already know opening balance of cash is 40,000, closing balance of cash is 40,000, and deposited the balance into bank account. So whatever is more than 40,000 will be transferred to bank account. He informs you that he has sold goods at profit of 25% on sales. Somewhere it will be useful, this information. Okay. Now following information is given to you. Now you know how to do it. Everything we have to keep it ready. And automatically we have to put into the respective places. You have to tell me this cash in hand, where and all we have to put. We have to put it into opening balance sheet and the cash account to balance brought down. This also will go to closing balance sheet and cash account by balance carried down. Now, we'll go to opening balance sheet. Where is the opening balance sheet? Yes. Can you see, first cash account, can you see to balance brought down? And then we have to go to the opening balance sheet. Can you see cash here 40,000? Yes. Next. Then we have creditors. Opening balance of creditors. Where should it go? Opening balance sheet. 1,60,000 on the liability side. And also it should go to the creditors account by balance brought down. Then what we have to do? Closing 3,60,000. It should be there in the closing balance sheet. In the closing balance sheet, see, you should find the cash also. You should find the creditor also, and it should also be shown as to balance carried on. Clear? Okay. Next, after that, cash at bank credit OD. That means what? First of all, in the cash and bank account, okay, you should have bank column. Can you see by balance carried on for bank column? And in the opening balance sheet, you can see bank OD on the liability side. Then here 3,20,000, nothing they spoke. That means it is not OD, it is normal balance. So here you are going to write in the cash and bank. Can you see by balance carried down 3,20,000, and this 40 we already know because 40 it is. Okay, this 320 will be shown in the closing balance sheet as what? Normal balance. Are you getting this? Now don't get confused, sir. How, sir? Balance brought down also on one side, balance carried down also on one side, because balance brought down was OD. So it was credit balance. Balance carried down is not OD. Balance carried down is not OD. So that is also on the same side. But when it goes next year, it will go to the debit side. Is this clear? If which one? This is debit only. Here, if they specifically mention debit, that I mean they didn't mention, but it is assumed that as debit only, because for this they told credit. Actually, they should have told, because normal assumption is what? Starting credit, ending also should be credit, but they have not mentioned. This 320 is usually debit, because they said cash at the bank. Are you getting it? Actually, they are not wrong. They said cash at the bank. When they tell cash at bank, that means it is debit balance. But if they tell cash at bank and they tell credit, that means it is OD. Is this clear? Okay, that's why in the opening balance sheet, this will be shown on the liability side. In the closing balance sheet, this will be shown on the asset side. Clear? Now, sundry debtors, 4 lakh, 14 lakh. Where should we put it? Opening balance sheet, closing balance sheet, and the debtors ledgers. Okay, you can see the opening balance sheet, sundry debtors. You can see the closing balance sheet, sundry debtors, and you can see the debtors account balance brought down and balance carried on. Is this clear? Then finally, stock in trade. Opening stock only is given, closing stock is not given, because they gave the ratio there. We can calculate it. Okay, this will go to opening balance sheet 11,20,000, and it will go to trading account opening stock. Clear? Closing stock later we will find out. Now, one thing we understood, all the opening balances when we put, you will automatically get the capital. Capital is the balancing figure. Where will this capital go? It will go to the closing balance sheet, okay, as your starting point. As your starting point. Other things we have to add and minus, we will see it. Now, next. Analysis of bank passbook. That means whatever we are reading are bank transactions. Reveals the following information. Payment to creditor. What should be the entry? Payment to creditor. Creditor account debited to bank account. Creditor account debited to bank account. Where is the creditor account? Yes. Can you see over here? Creditor account debited, and it should be under the bank column now. 28 lakhs. Are you following this? They have done cash book with cash and bank column. You could have done cash account separate, bank account separate, no problem. Okay. Next. Payment for business expenses. Expenses account debited to bank account. So in bank you should find 4,80,000 and you should put it into P&L as expense. So in your P&L you should find 2 business expenses, 4,80,000. Is this clear? Next, after that, receipts from debtors 30 lakhs. Receipts from debtors. Bank account debited to debtors account. Bank account debited. Why bank account? Bank passbook. Okay, so bank account debited. We'll go into bank first. Yes, where is it? 30 lakhs. And in debtors account, you should find it as by bank. Is this clear? Okay. Next, loan from Gaurav, 4 lakh taken on 1st October 2024 at 10% per annum. First, we will record the loan. Bank account debited to Gaurav's loan account. Bank account debited to loan account. So, in bank account, can you find this? Gaurav's loan, 4 lakhs. Can you find this? Yes. And Gaurav's loan is a liability. Liability should be shown in the balance sheet, closing balance sheet. Go and check. Can you see loan from Gaurav? 4,20,000. Even the outstanding interest also they have added. But you show it separately usually. Loan you show separately. Outstanding interest you show separately. Loan is 4 lakhs. Outstanding interest, how did we calculate? 10% per annum. So 4 lakh into 10% into 6 divided by 12. Because it is only for 6 months now. Okay, 20,000. Can you see this interest here? 20,000. So totally they have taken 4,20,000. Outstanding interest you have taken over here. It should also go to P&L because entry for outstanding interest is interest account debited to outstanding interest. So 20,000 interest on loan should be there in the P&L as well. Okay. Because it is outstanding, this 20,000 you will not find it in the cash and bank account. Is that clear? Okay. 4 lakh is done. Now next. Cash deposited in the bank, 4 lakhs. Contra entry. What should be the entry? But bank account debited to cash account. We have to pass that because we are showing everything over here. Can you see over here? Bank account debited to cash account. Clear? Bank increases, cash decreases. Next, he informs you that he paid creditors for goods 80,000 in cash. Creditor he has paid 80,000 in cash. What is the entry for this? Creditor account debited 80,000 to cash account. Now you have to put that 80,000 in the cash column. Your batch. Okay, so by creditors 80,000. Is this clear? Next, after that, salaries 1,60,000 in cash. So what should be the entry for this? Salaries account debited to cash. So you are finding this 1,60,000 over here, and salary is also an expense. So go and put it in the P&L as well. 1,60,000 salaries. Is this clear? Next, after that, he has drawn 3,20,000 in cash for personal expenses. Drawings account debited to what? Cash account. Where is it? Drawings 3,20,000, and this should be subtracted from the capital. 3,20,000. Can you see we are subtracting from the capital 3,20,000 in the balance sheet? Yes. Then during the year, Chetan had not introduced any additional capital. Okay, no additional capital is there. Surplus cash, if any, to be taken as cash sales. If you have surplus cash, that means they are indirectly telling you, listen boss, cash account, you already know opening balance, closing balance. Opening balance 40, closing balance also 40. So if you have missing figure in the cash account, that is your cash sales. Okay, all the purchases were made on credit only. That means they are indirectly telling you there is no cash purchase. There is no cash purchase. Done? No? Question is done. So now how will you close things? In debtors account, the missing figure is sales, credit sales. Debtors account missing figure is credit sales, and credit sales will go to trading account. Okay, 40 lakhs. And in sales, not only credit, there is cash sale also. You will find it in the cash account. Then after that, in the creditors account, missing figure is purchases. Here there is no cash purchase, only credit purchase. So directly 30,80,000 will go into purchases, trading account. Clear? After creditors, the next thing that we are going to check is cash and bank. First we will focus on cash. In cash, can you see missing figure is sales, because cash sale is there. Balancing figure is cash sale. Go to the trading account and write sales 9,60,000 and put the total sales on the credit side of trading account. Clear? After that, bank account, what is the missing figure? Do we have a missing figure in bank? No. If we had, we would be thinking what to do, because cash sale is already taken care of. Cash purchase is not there. Okay, and additional capital is not introduced. Drawings they already told. So can you see bank, automatically it is telling. There is no missing figure in bank. Is this clear? We have had questions where missing figure can be there in bank also. But for that they will give you information. Now after that, what we are going to do? Go to trading account. In trading account, I hope you remember that closing stock was not given. So what we have to do? We have to use this information. The goods are sold at 25% profit on sales. Look at the sales. 49,60,000 on that 25% is 12,40,000. That is your gross profit. Because you got the gross profit, closing stock is balancing figure. Closing stock is balancing figure. What will you do with closing stock? Also go to balance sheet and write over there closing stock. Then after that, the gross profit comes to P&L, and then you will get the net profit. What will you do with net profit? Add it to capital. That's the end of the story. Balance sheet should tally after that. Okay, all the things we have discussed. I hope it's clear. Any doubt with this? No. Next. Question number 5A. Okay. Viba Garments Wires were unable to agree the trial balance on 31st March 2025 and have raised a suspense account for the difference. Next year, the following errors were discovered. Very good. Rectification of errors for only 5 marks. Very sad. If it comes to 10 marks, it's good, no? It's scoring. Now, in rectification, there are 3 stages. In before preparation of trial balance, after preparation of trial balance, in the next accounting period. This one is happening where? In the next accounting period. It's happening in the next accounting period because they told that next year the following errors were discovered. So, suspense account will be there for one-sided errors, and income or expense you will use P&L adjustment account. Additions to machinery made during the year were wrongly debited to repairs account. What should be the entry? Anywhere in the question they have not given depreciation percentage, so directly we'll rectify this thing. So machinery was there. Machinery account debited to repair should have been the rectification entry. We can't use repair, we will use P&L adjustment. Machinery account debited to P&L adjustment account. Is this clear? Directly, I'm not discussing correct entry, wrong entry at MTP time. Okay, you should know it now. Addition to the freight column in the purchase journal was excess by 13,500. Extra freight, we have to remove the extra freight. So freight should be credited now. So can you see over here, P&L adjustment and one-sided error. So suspense account is debited. One-sided error, suspense account is debited. Next, goods to the value of 9450 returned to Ray and Company had been posted to the credit of Ray and Company and also to purchase returns. What is the entry for goods returned to Ray and Company? Actually, Ray and Company to purchase returns. Ray and Company to purchase returns. They have credited Ray and Company. They have credited purchase return also. Purchase return is correct. But Ray and Company should not be credited. It should be debited. Instead of debit, when we credit, what should we do? We should double it. We should double it. 18,900. One-sided error. So, to suspense account. And Ray...
Account rate from Ray.
Oh. Just ICA things. It is Ray and Company account debited. Why? In rectification, what is not told is always correct. Here they told has been posted to the credit of Ray and Company also to purchase returns. That means purchase return is also credited. That is a mistake that ICA has made. Okay. Sundry items of furniture sold for 2,70,000 had been entered in the sales book and the total of which had been posted to the sales account. Sundry items of furniture sold we have put into sales book. So what we have to do? We have to remove from sales and we have to remove from furniture also. P&L adjustment to furniture. Why? Sales has to be debited actually. So instead of sales debit, we are writing P&L adjustment. Furniture is not an income or expense. So furniture only will be credited. Then finally, a bill of exchange received from Mayur and Co. for 1,80,000 had been returned by the bank as dishonored and had been credited to the bank account and debited to bills receivable account. Whenever bills are dishonored, we should not debit. We should always debit the drawee. That is Mayur and Company over here. So Mayur and Company should be debited and bills receivable should be credited. So here no P&L adjustment. No, because both are balance sheet items. Is this clear? Yes. I think in this MTP they have not asked a full-fledged question of bills of exchange. No. Bills of exchange full-fledged question is missing. Accommodation. Remember, check for accommodation. Because if you do accommodation, all the other things will automatically be covered in that. Yes. Following is the receipts and payments account of Rainbow Club for the year ended 31st March 2025. Let's see what they have asked. Going to the end of the question. You are required to prepare income and expenditure account for the year ended. 5-mark question they have asked from NPO. NPO usually comes for bigger weightage. Here in MTP they have asked only for 5 marks. Now, first, where will this opening cash go? Opening balance sheet, which we are going to not bother because we are going to prepare only income and expenditure account. Subscription 67,500. Okay. Yeah, no. By subscription we are going to write in the income and expenditure account. But subscription account not required. Okay, if you want you can do it as a working note. Or what we are going to do, 67,500. Subscription due. Last year's due, what you should do? Minus 750. This year's due, what we should do? Add 3,000. Last year's received in advance, what should we do? Add 2250 because last year received in advance means this year's it is. And this year's we have to minus 1,500. 70,000. Some are telling 70,000, 70,500. 70,000. Okay, so now what we will do? 70,500, no? Alright guys, calculation errors you should not make. Then we cannot blame the calculator. 70,500. Okay. Minus plus minus. I hope you know the logic. We are preparing income and expenditure account. Only this year's items we should take. So last year's due means last year's income. Remove. This year's due means not received, but it is this year's income. Add. Last year received in advance means already received, but it is this year's income. Add. This year received in advance means received, but it is next year's income. Minus. So you'll get 70,500 and this is your subscription. Clear? Okay. Next. After that, what do we have? Donation. What are the adjustments we have? Stock of cosmetics and amount due. Okay. When we have this stock and all, you remember, right? We have to take consumed. Whenever we have this, we have to take consumed. 5 marks, 2 major adjustments, they have tested in that. Okay, now, donation. Nothing is told. Donation is always considered as general donation. If something is told, only donation is considered as specific donation. Yes, capital. So 6750, can you see in income and expenditure? Yes. Next, interest on investment at 6% for the year, 4,500. What should we do? Do we have any idea about the investment? No. If we had idea about the investment, we will calculate 6% and see whether we have received the full amount. Then even if it is not received, we will take it because we follow accrual concept. Okay, but here we don't have any information. Just put the 4,500 here on the income side. Next, after that, fashion show proceeds. Fashion show proceeds. Always check on the other side. If there is any fashion show expense or something, you can take net. But nothing is there, right? Oh, sorry. Fashion show expense is there. So you can do one thing. 75,750 minus 51,000. 24,750 you can take. 24,750. Is that clear? Yes. Can you see 24,750? If at all you don't net it also, they cannot mark it as wrong. If you don't net it also, they cannot mark it as wrong. But you'll be irritating the person who is correcting because in the answer key it is net. Are you getting my point? Just a better presentation technique. That's all. Just to present it in a nice way. Okay. Next. Payment for cosmetics. Payment for cosmetics we can't take because we have stock of cosmetics and all. So in this case, what we should do? We should find cosmetics consumed. We should take cosmetics consumed opening stock plus purchases minus closing stock. Opening stock already we know 15,000. Purchases we don't know. Closing stock we already know 10,500. Sir, what are you talking? Purchases we know, sir. Here it is written payment for cosmetics. Payment for cosmetics is not purchase. Payment to creditor is purchase. Just now we did incomplete records. Payment to creditor is not purchase. Purchase is different because there can be credit item also. How do we know there is credit purchase? Because amount due is there. So what we have to do? Prepare a ledger. Okay, buy, balance, brought down 12,000 to balance carried down 16,500. And do we know the payment that we have made? Yes, 22,500. So creditor account debited to bank account 22,500. Now you will get the purchase, which is the missing figure. By purchase, balancing figure. How much? 27,000. Is this clear? Now the purchase what you got, put it over here in this calculation. And that time you will get the consumed. How much? What man? Random number you do? Oh, that only you told. Okay, 31,500. Did you understand this? This is one of the, see, here it is cosmetics. Some other question it is medicine. Medicine supply. So when there is medicine supply, first of all you have to understand when there is opening stock and closing stock of medicine given, that time you have to find the consumed. And if opening balance and closing balance of payment due or creditor is given, that time the payment and the purchase is not the same amount. You have to go and prepare the ledger or you have to do the calculation and find out. Clear? So 31,500 is what we are going to take. Can you see cosmetics consumed? 31,500. Is this clear? Yes. After that, what do we have? Honorarium to beautician. What should we do? Expense. Direct. No tension at all. Salaries. No outstanding is given over here. Directly expense. Then sundry expense. Directly expense. Then rent of building. No outstanding is given. Directly expense. Then cash. This will go to closing balance sheet. Okay. Automatically you're getting surplus. Done. So they've tested you on the subscription knowledge. That is outstanding, received in advance and all. And this consumed part they have tested. Yes, let's go further. C. Following notes pertain to balance sheet of Manoj Limited. 10-mark question. Show necessary journal entries in the books of the company and prepare the extract of the balance sheet on 30th April after bonus issue. Wow. Okay, 10 marks if bonus is being asked. You should be very, very happy about it. You should be happy that God has heard all your prayers. Okay, bonus, there is one very important point. What is that? It should be fully paid up. It should be fully paid up. If you notice the question over here, can you see it is partly paid up? Partly paid up. Now, they have told that final call is made. On 1st April, the company made a final call of 2 rupees per share on 2,70,000 equity shares. What is the entry for final call? Equity share, final call. When we don't know, it is not bank, it is think. Equity share, final call account debited to equity share, capital account. Due entry, yes, equity share, final call account debited to equity share, capital account. Then they told, this is on 1st April, call money was received by 20th April. So dates you have to be careful. Bank account debited. Now bank is first because we thought about it. Okay, bank account debited to equity share, final call, done. Clear? Next, what next? Thereafter, the company decided to capitalize its reserves by way of bonus at the rate of 1 share for every 4 shares held. How many shares we have here? 2,70,000. So 2,70,000 into 1 by 4. 67,500. Face value is 10 rupees. So 6,75,000 we require for bonus. For bonus, always there is an order of utilization. First preference is always CRR. Do we have CRR? Only 120 we have. Second preference is always securities premium. Do we have securities premium? Yes. Then we go into general reserve. If that is not sufficient, finally we go into P&L. Can you see over here? Okay, they have interchanged the order. Please don't do it. First preference is CRR. CRR account debited, securities premium debited, general reserve debited, and balancing figure will be taken from P&L to bonus to equity shareholders. Please add the word equity also over here. Okay, bonus to equity shareholders and bonus to equity shareholders account debited to equity share capital. Done, bonus issue. Then they have asked what? Extract of the balance sheet. Authorized capital, we already know. Full information is given. Copy paste. Authorized capital is given here only. Directly copy paste into the notes. Authorized capital. Issued and subscribed. Sorry.
So the authorized capital has been increased. Is there any need for assumption?
21,60,000 it is. Okay. 21,60,000 plus that final call amount was how much? Final call amount was 5,40,000 and the bonus issue was 6,75,000. Can you tell me what is the total? 3 lakh no. 33 lakh 72. From where the 2 is coming? 21 lakh 60 plus 5 lakh 40 plus 6 lakh 75. 33 lakh 75,000. Yes. Now see here. Authorized capital of equity is only 30 lakhs. So authorized capital also you should take it as 33 lakh 75,000. Equity share also no. Equity share only.
No, amount here, sir. 3 lakh, before it was 3 lakh, now it's become 3 lakh 30,000.
Shares
Shares.
yes. See, issued capital has gone over the authorized capital. That is why when we put into issued capital, we will put right. So authorized capital also we have to increase because without increasing authorized capital, we cannot increase the issued capital. So it is always better in such cases to write a note telling that it is assumed that all necessary resolutions are passed for increasing the authorized capital. We'll see if they have given the note. They just told authorized capital should be increased as per the given details. Existing issued capital plus issue of bonus and all 33,75,000 directly they have given. It is better to write a note that it is assumed that all necessary resolutions are passed to increase the authorized capital. Okay, so yeah, this will be the authorized capital. Preference shares, we have not spoken about them only. So 2,40,000 will be as it is, issued capital. And this we know, 33,75,000 which we calculated. Now reserves and surplus also they have, see out of the above 67,500 shares were issued by way of bonus. One additional note also is mentioned. Now reserves and surplus, see CRR became 0. Securities premium became 0. General reserve became 0. And from P&L we removed little. So only P&L will be remaining. Is this clear? This
Calculation we can direct reserve plus P&L only for like 80,000.
you can do that. You can do that. No issues.
So whether can we show it in a balance sheet?
Which one?
This extent.
No, we cannot. Because in companies, balance sheet format is fixed. This is actually notes. This is actually notes to the balance sheet. So this we cannot show in balance sheet. In balance sheet, you know what? This part will be shown as only share capital. That's it. And this part will be only shown as reserves and surplus. So in balance sheet, these two total will go to the balance sheet and this 4,80,000 will go to balance sheet. So calculation we cannot show in balance sheet. We will just show it as notes. Okay, extract part they have shown.
What if it's capital reduction of reserve? they mention only capital reserve.
Then we can't take it. Simple.
We cannot take.
No. Capital reserve is a different item. Capital redemption reserve is separate item.
But if a question is mentioned that some capital reserve is also taken.
If they tell in the question, capital reserve is considered as free reserve.
They didn't mention like, but they mention like a capital reserve and your security premium all are taken to issue the.
Then you can use it. But if they don't tell anything, capital reserve is actually a capital item. You should not touch it.
In which order the capital reserve will be?
After CRR and securities premium. After CRR and securities premium. Because CRR will have first preference. Because CRR has only one use. So use it first. Securities premium will have second preference because securities premium has 5 uses. So use it. After that, the free reserves come. Then you can use the capital reserve if it is mentioned in the question. I think you have one question in the study material where there is investment allowance reserve. Investment allowance reserve 10,000. In bracket, they said 5,000 is free for distribution as dividend. So the 5,000 you can use, 5,000 you can't use. Okay. Yes, that should be it, guys, with that particular question. Easy 10 mark question on bonus issue. Always, bonus can also be merged with forfeiture. And it can be merged with preferential redemption. Because when you redeem preference shares, you'll get CRR. That CRR you can use for bonus. That can happen. Okay, question number 6A, 15 marks, as always. This is always the thing. Okay, company also paid interest on calls in advance to M. The company maintains calls in arrears and calls in advance account. Give journal entries to record this transaction. Show working of interest calculation. Okay, interest calculation on calls in arrears and calls in advance. Let's address the fact. Interest on calls in arrears. How much is the max?
12.
Interest on calls in advance. How much is the max? For both you are telling 12. This one is 12. No. This one is 10. See, if you are getting confused about these percentages, just remember that what we are going to pay is higher. What we are going to pay is higher. Interest on calls in advance we are going to pay, that is 12. Interest on calls in arrears we are going to receive, that is 10. Just remember what we are going to pay is higher. If you are confused with the percentages. Okay. Amit Limited issued 50,000 equity shares of 100 each at a premium of 20%, payable 20 on application, 50 on allotment, including premium, and 20 on first call and balance on final call. Okay, so 20 rupees application, 50 rupees allotment, including premium. That means it is 30 plus 20. And how much is first call? 20. That means final call is 30. That makes it 100 plus 20. Okay. All shares were fully subscribed. So we don't have the concept of pro-rata allotment to worry about over here. Mr. M, who held 5,000 shares, paid full remaining amount on first call itself. First call, that means application allotment, smoothly it went. But the final call which was made after 4 months from the first call was duly paid, except a shareholder having 500 shares and another shareholder having 250 shares. So people who have missed the payment is in the final call. Till final call, everything has gone smooth. Clear? 2 people have missed. They paid their due amount after 3 months and 4 months respectively, along with interest on calls in arrears. Company also paid interest on calls in advance. Application has to go very smoothly. Allotment also has to go very smoothly. There is no problem only. Only in first call, calls in advance will come, and in final call, calls in arrears also will come. Okay. How many shares? 50,000 shares. 50,000 into 20. What should be the first entry? Yeah, 10 lakh. What should be the first entry? Bank account debited to equity share application. Bank account debited to equity share application 10 lakh. Then the next entry automatically equity share application to equity share capital 10 lakh. Done, sorted. Next entry is due entry on allotment. Bank account, it will not come first this time. It will come second. Equity share allotment account debited to equity share capital. 2 securities premium. Don't miss that. Okay. So equity share allotment to equity share capital. 2 securities premium. 30 per share. We wrote over there 30 plus 20. 30 per share and 20 per share. Is it clear? Next, also smooth. Bank account debited to equity share allotment. Done. Finished. Next should be the first call. First call is how much? 20. What should be the entry? Equity share first call account debited to equity share capital account 10 lakhs again. Okay. Now you have to be a little careful because in the receipt part, calls in advance is there. How much is the calls in advance? Mr. M who held 5,000 shares paid full remaining amount. That means he paid 5,000 into 30. 1,50,000 he has paid extra. So how much we were supposed to get actually 10 lakh? We got 11,50,000. because that 1,50,000 calls in advance is also there. 2 equity share final call, 2 calls in advance. 2 calls in advance. Is this clear? Now we have to go into the due entry for final call. What is the due entry for final call? Equity share. Fine, no problem. We are just spending 1 minute more. That's fine, fine. If you are comfortable, it's fine. No issues at all. Okay, then after that, what happens? We are making the final call. Final call is how much? 30 rupees. So equity share final call account debited to equity share capital account. That will be 15 lakhs. Now this entry you have to be careful. Who has not paid? 500 shares and 250 shares. They have not paid. That means totally 750 shares. They have not paid into 30 rupees. 22,500. Can you see calls in arrears 22,500? Now calls in advance is no longer advance because we have reached the time. So calls in advance has to be reversed. Calls in advance debited. Okay, now bank account debited over here. Remaining money we received. If you are confused, no, how many shares we had? Totally 50,000 shares. 50,000 shares. Out of that, 5,000 shares already they have made the payment in the past itself. They will not make the payment again. And 750 shares, they did not make the payment now. So we will have 44,250 shares. These people are making the payment into 30 rupees. 13,27,500. Is this clear? How we got that bank account thing? Okay. Otherwise, you find these two numbers and you can put the balancing figure over there. But as a point of verification, it is better if you calculate and see it is matching. Okay, perfect. Now, 2 equity share final call. Now you have to be careful with the calls in arrears part. First, what we will do, we'll pay interest to that person. Now, how much is the calls in advance? 1,50,000. And on calls in advance, what is the rate of interest? 12%. Here clearly they told that final call was made 4 months after the first call. So into 4 by 12. Is it 6,000? Yes. Interest on calls in advance is expense for us. So interest on calls in advance is debited to the equity share holder and then we pay shareholder to bank. End of story. Now whoever did not pay, one person paid after 3 months, another person paid after 4 months. One person paid after 3 months and one other person paid after 4 months. The 500 fellow paid after 3 months. The 250 fellow paid after 4 months. So now what happens? 500 shares into 30 rupees. 15,000 into 10% into 3 divided by 12. Are you getting 375? 375. Here, is it an expense or income for me? Income. So shareholder account debited to interest on calls in arrears. Then after that, he will pay the interest also. He will pay the due amount also. So bank account debited 15,375 because 15,000 was the amount. Okay, to calls in arrears, 15,000 gone. And to shareholder 375, the interest which we have created over here. Is this clear? First, this is actually the interest due entry that we are going to pass. We can merge and pass. If you merge and pass, it will be bank account debited to calls in arrears to interest on calls in arrears. Direct. If you are merging. Okay. Now, next time what happens? The other person had how many shares? 250 shares into 30 rupees. That means how much is the amount? 7,500 into 10% into 4 divided by 12. 250 rupees. Are you getting 250 rupees? Can you see due entry? Okay. Why they are passing due entry is because exact date they might not give. So first due entry, then the receipt entry. So now the next entry is 7750, 2 calls in arrears, 2 shareholders account. Is this clear? That should be it. They have shown the interest calculation also. Yeah. P&L. It is better to pass even the P&L effect. That is, interest on calls in arrears will be credited to P&L. Interest on calls in advance will be debited to P&L. Yes. Now, as always, they give one small theory question. Adjusted selling price method. Remember, we have an adjusted selling price method. Usually wholesale and all. Okay. That they have asked theory. Have a look at it. Adjusted selling price is also called as retail inventory method. It is used widely in retail business or in business where the inventory comprises of items, the individual cost of which are not really ascertainable. Remember, in adjusted selling price method, what we do? Find the closing stock at selling price, remove the profit, that time you will get the closing stock at cost. Okay. The historical cost of inventory is estimated by calculating it in the first instance at selling price. That means first calculate at selling price, then deducting an amount equal to the estimated gross profit from such goods. Closing stock at selling price minus, I think 2 questions are there in the study material. One little more bigger and one smaller. Okay, very long time they have not asked numerical question from adjusted selling price. If they want to, they can always ask, but here they ask theory. Clear? Next, after that they ask principal methods of ascertaining cost of inventory. Specific identification method, FIFO, weighted average cost. That's it. LIFO and all they have not spoken about. Why? Because LIFO is not followed actually. Okay, they have stopped using LIFO, but because very less logic in LIFO. Last in first out. First thing will get rotten over there. Are you getting my point? Okay. Simple average also doesn't make sense. You know why it doesn't make sense? Because one I purchased at 10 rupees. Another I purchased at 1000 rupees. But the one which I purchased at 10 rupees, I have purchased 5000 units. The one which I purchased at 1000 rupees, I have purchased only 1 unit. Now both will get average, no, if you take only prices. That's why weighted average. That's why they also told in the question, principal methods. Those are also there. Principal methods means main methods which they are following. Okay. Ascertaining the cost of inventory. The cost of inventory of items that are not ordinarily interchangeable and goods or services produced and segregated for specific project should be assigned by specific identification method. Usually what? Go and identify. But when so much is there, that time follow FIFO, LIFO and all those things. Okay, of their individual cost under the specific identification method. If you don't know, then you can follow FIFO, you can follow weighted average. These are the principal methods. Clear? Last they said, explain in brief the basic consideration for distinguishing between capital and revenue expenditure. Whoa. 5 mark question. Nature of business. What does it mean? If you're doing furniture business and you purchase furniture, for you it is revenue expenditure. But if you are doing computer business and you purchase furniture, that is capital expenditure. Recurring nature of expenditures. Electricity bill you pay every month, revenue expenditure. But if your electricity meter board only is spoiled, and if you are repairing it, that is also revenue expenditure. But after repairing, if you are going to use little less units, that means it is going to give you extra benefit. Then only capital. Are you getting my point? See, purpose of expense. When we purchase a building, whatever happens, everything is added. Purpose of expense. For example, if you purchase one AC, installation charges, it will be capital. Are you getting my point? After that, to repair the AC, if you call someone, that will be revenue. Clear? Materiality of the amount involved. That means for what have I used it. Okay. For example, just now we did know manufacturing account and all. There what we did, if there is some repair and all, if it is related to factory, we put it over there. If it is related to any other place, we put it in P&L. But if that repair was not, it was related to factory only, but it was giving you extra benefit. It is giving you extra benefit. Imagine you have a machine. It is manufacturing 6,000 units per hour. Okay, you repaired it. Now also it is manufacturing 6,000 units per hour. It is going to be revenue expenditure. But after repairing it, it's going to give you 7,000 units per hour. Then it will become capital expenditure. Is this clear? Okay, that should be it with MTP1. Let's wait for MTP2 and we'll discuss MTP2 once it is released. Yes guys, that's it. See you. Bye.